Hi guys. Okay, so let's talk about federal income taxes. Federal income taxes are taxes paid to the government. The federal government, this means like all of the United States. This pays for stuff like defense, obviously Social Security, Medicare, but not the local things that you're thinking of. The local things that you're thinking of, like roads and although there is some here with public schools, a lot of the public school dollars come from the state taxes instead, which we'll be talking about a different day. The IRS is the organization that collects. It's the organization that collects taxes. It stands for Internal Revenue Service. So when you're paying your taxes, you have to use something called a tax table to look up how much you owe. And you owe different amounts based on whether you are single or you're married, filing jointly, or if you're head of a household. So single person needs a certain amount to live, and married filing jointly means that you are two people living together. You're married and you're filing one set of taxes together. If you're married filing separately, that means that you live together. But you are also going to file your taxes separately. Head of a household means that you are a single person, but you are responsible essentially for a family of some type, and you may not be married, but you are in charge of a household of a group of people, and you are the main breadwinner, so you have to pay a little bit less. So this would be taxes for if you made between $12,000 and $12,050. If you're single, your taxes is this much. If you're married filing jointly, your taxes is a little less. That's because you both together are making this amount of money compared to this amount of money for one person. And head of a household is a little bit less too because you're responsible for more people, so you have to pay for less taxes. So let's just talk about how to read this first. I'm going to do number 7, 10, 13, and 16 with you. So, how much tax does a married person filing jointly owe on the following amounts? Okay, now it says that it is at least but less than, so at least $12,050. If you are married, filing jointly, that is $1,208 right here. If you are married filing separately for $2,777, let's see, that's between $750 and $800 right here, and you're married filing separately, that's right there, $1,498. If you're using something like TurboTax, it looks it up for you. If you are doing this on your own without paying a service like TurboTax or a tax preparer, which I would suggest if you are young and don't have complicated taxes, do it that way for sure. Then you're going to have to use tax tables and look them up online. All right, let's say you made $13,001, but you're head of household. That means you're between this one and this one. So you are, let's see, $1,356. Single, $649 is this bracket right here, and you are single, so that's this one. $1,625. So this first page is just like a test to see whether you can read this chart pretty well. On the back side, we start talking about gross incomes, adjustments, exemptions, and deductions. They sound terrifying, but they're not that scary. Okay, so I am going to go through this stuff really quick with you. Okay. Excuse me. So, tax deductions and tax exemptions reduce the amount of taxes you have to pay. They reduce your taxes. A tax exemption is basically money taken off your income because you need money to live. So, like, you shouldn't be taxed on a certain amount of your income, and the reason why is because you need, like, a certain amount of money just to get by in life. Often we call that a standard deduction. They used to call them exemptions. This also includes any dependents you might have. So if you're making a low enough income and you have people relying on you, you might pay zero taxes because they're just like, man, you're just trying to get by. You're trying to survive. You don't pay any taxes because you're making so little money and you have to take care of a kid. Like, you don't need to pay any taxes. That's exemptions. Deductions are other money you can take off your taxes. Well, take off your income. And the money that you're taking off your income, this would be like itemized stuff. For example, there's like a teacher deduction for me that allows me to deduct up to $250 off of like the stuff I buy for my classroom because they know that teachers buy stuff for their classrooms and they decided they shouldn't be taxed on that. There is, lately we've kind of gotten rid of exemptions, although this is just temporary and comes back in 2026. But the deduction, the standard deduction kind of covers you for living. Here you can get rid of like job expenses, like if you have your own business, that kind of thing. So if you're a farmer, you could deduct some equipment depending on if it's for your business and so on. There are some other deductions you can take too. There are some child credits. So your taxable income is your normal gross income. That's how much you make altogether because it's so gross that it's added all together. And then you subtract the deductions and the exemptions. So after they kind of like adjust that income, that's called the adjusted gross income. And that's actually what you get taxed on. You get taxed on the amount of money after they take away the deductions and exemptions, the stuff that you're owed essentially. So let's do 19 together and imagine that you are single and that your W-2 from your work says that you made $25,374. But